We are back here on my channel, Survive and Thrive, and I want to cover a company that is a really value stock out there and everybody knows and loves, but has been getting hammered into the last quarter of 2021 and entering into 2022, and that company is Disney, ticker symbol DIS. I know everybody has a pretty good understanding in terms of what Disney is with their streaming service, the parks that they have in California and Florida, as well as worldwide. But I want to do a quick breakdown of what their revenue looks like, and this is from 2021. Starting with this chart, revenue of the Walt Disney Company in the fiscal year 2021 by operating segment. You can see here with this bar graph, $16.5 billion is in the parks, experiences, and products, $50.8 billion media and entertainment, $28 billion linear networks, $16.3 billion direct to consumer, and $7.35 billion content sales, licensing, and other. So the two biggest categories, linear network and media and entertainment. So that's why I think a lot of people maybe get the misconception that with the pandemic starting to ease, that we should see a bigger jump with the Disney stock, but their biggest category that they are primarily focused on is media and entertainment. And a recent article that I just read talks about two major Walt Disney projects that face big problems. The entertainment company may have a customer problem with a new Disney World attraction, and another big project has been delayed. Now, just to paraphrase and jump down to what those two issues are. The first, Disney delays its latest cruise ship. Disney's cruise line has sort of been a cherry on top for the company. It's less than 5% of total revenue, so the company was extra careful when it came to getting back to sea after its pandemic-related closure. While both Royal Caribbean and Carnival Cruise Line began sailing in early July, Disney did not bring back its cruise ships until August. But even with the shutdown, Disney kept its latest cruise ship, the Disney Wish, on track for a June 9th debut. That sailing, however, won't happen, nor will the next 11 scheduled sailings for the highly anticipated ship. The company released a statement on the delay, which Walt Disney News Today published. Now, like I said, because they are so hyper-focused on the entertainment side, as well as media services, as well as the parks, this falls into that entertainment portion of their revenue, and so it does definitely have a fairly large impact. Disney has rebooked passengers on the original maiden voyage to the new maiden voyage on July 14th. If they are unable to move to the new sail date, they will have the option of either a 50% discount on a future cruise departing by December 31st, 2023, with any originally paid funds converted to a future cruise credit, or a full refund, the company said. And while a few weeks of delay will ultimately not be a very big deal, this has proven to be an expensive miss that may also create some ill will with some of the Disney Cruise Line's best customers. Now, the next issue is the Star Wars Galactic Star Cruiser may actually be a bigger problem. When Disney said it was building an immersive Star Wars hotel that would drop superfans into a multi-day adventure in a galaxy far, far away, it was met with much initial joy, and an awful lot of people reserved the expensive experience. A family of 4 could expect to pay nearly $6,000 for 2 nights on board Disney's Galactic Star Cruiser in a standard cabin. Meanwhile, a couple without children can expect to pay $4,800 for the one-of-a-kind choose-your-own-adventure in a galaxy not so far, far away, Travel and Leisure reported. So it's a very expensive experience, but it doesn't seem to deter the real superfans that are out there. But because Disney has now went down the road of stating that there is going to be delays, seeing this from the multiple websites showing that you can make reservations for the hotel at times that were once fully sold out, that trend continued through January, which suggests that either the price might be too high, or Disney, having failed to wow fans with its promo videos, needs to have a prove it moment through delivering strong reviews before people will spend this much money on a 2-day experience. Those are negative catalysts for the share price, and like a lot of companies, investors react and sell the news. And so I think that also is contributing to the drawdown as well as their missed earnings in the last quarter of 2021. You also can look at this if you're doing all of your research and really reading about this company in particular. You know that they've been around for a very long time, so they are tried and true and a value stock out there, but it's a long-term play. In the NASDAQ article, 3 cheap stocks to buy now before they take back off. January was a rough month for stocks, but the downturn won't last forever. Now is the time to look for cheap stocks to buy before they take back off. Many stocks that were flying high only a few months ago got taken down hard as the S&P 500 index fell 5.3% during the first month of the year. Many analysts on Wall Street see this year's decline as a correction, not a crash, and are urging investors to buy stocks that have come down 20%, 50%, or more. One of those cheap stocks to buy now that they've listed is Disney. I don't know, I can't see. I don't know. I don't know where it is, Sissy. Yeah. Okay, well, I can't grab it right now. I'm doing something.
Well, I'll try and grab it.
Entertainment giant Disney is usually a reliable bet, and DIS stock got a big boost during the pandemic as the Disney Plus streaming service took off, adding nearly 120 million subscribers in the 2 years after it launched in autumn of 2019. So it's really great for me. I have a fairly low cost basis because I did buy during the time of when the pandemic actually impacted all stocks across the board, and I got in around the $102 mark. From the onset of the pandemic in March 2020 through September 2021, Disney stock gained 114%. However, since the start of the fourth quarter last year, Disney's share price has declined 20%. So this is one of those companies out there that has taken that slump, and it may be a good entry point or a place to add to your holdings if it's a play that you want to make for the long term. The slump came after Disney issued disappointing earnings in November like we discussed, missing analyst expectations for both revenue and earnings per share. While the overall earnings at Disney were disappointing, what really sent the stock lower was the company's announcement that subscriber growth at Disney Plus slowed. And like we saw, that is a primary focus for the amount of revenue and market segment that gets them the most money. Wall Street expected Disney to add 9.4 million new subscribers in the company's fiscal fourth quarter, but the company added only 2.1 million. Analysts and investors seem less concerned that Disney's theme parks and cruise lines are reopened and focused on the slowing subscriber numbers. Another key aspect of Disney is that prior to the pandemic, they also had a dividend that was paid on a semi-annual basis at 88 cents per share. So it was a fairly decent payback for the investors holding long term. Will Disney restart their dividend in 2022? This Motley Fool article focuses on key points. Disney's cash balance is higher than at any time before the pandemic. Disney is generating billions in free cash flow, and the Omicron variant could cause management concern and caution on restarting the dividend. One action that was taken during the pandemic was to pause the payment of Disney's semi-annual dividend. The move would save the company from sending billions in cash from its balance sheet. The pause was announced on May 5th, 2020, and has persisted to present day. That has some investors speculating that Disney may restart its dividend in 2022. Let's look at some of those factors. Most factors point to Disney restarting its dividend in 2022. Interestingly, by not issuing a semi-annual dividend, Disney saved $1.6 billion in cash based on an 88 cents per share dividend it paid in January 2020. That's $3.2 billion per year, and that can go a long way in securing Disney's balance sheet from any disruption caused by the pandemic. Speaking of Disney's balance sheet, it had $15.9 billion of cash and $13.3 billion in accounts receivable as of October 3rd. To put those figures into context, the most cash Disney held on its balance sheet before the pandemic was $5.4 billion in 2019. So they really loaded up on the cash side, and they are in a position where they've got a lot of free cash flow. Cash balance is not a constraint for Disney resuming its dividend. What about cash flow from regular operations? In its fiscal year 2021, which ended October 3rd, Disney generated $5.5 billion in cash from operations. Even after investing in necessary items for business operations, it earned a free cash flow of nearly $2.4 billion. That figure may prove to be a minor constraint, as few companies like to spend more on dividends than they earn in free cash flow. In this instance, at the previous rate, Disney's annual dividend would total $3.2 billion and would be higher than 2021's free cash flow of $2.4. Still, management may be willing to tolerate the slight imbalance in the near term, considering its massive cash balance and recovering business. However, one obvious factor that could keep Disney from restarting its dividend is the direction of the pandemic. The surge in new cases caused by the Omicron variant could throw a wrench in Disney's recovery. The verdict: Disney could probably restart its dividend in 2022. Admittedly, the odds are higher for it to resume payments later in its fiscal year. That would give Disney time to evaluate any changes to the momentum in its recovery caused by the Omicron or any other variant that emerges. Note, however, that it wasn't necessarily the outbreak of coronavirus that caused Disney to pause its dividend, but the government-mandated closures of its theme parks and several other businesses. With more people now vaccinated against the coronavirus, further lockdowns may not happen. So there is a strong possibility that dividends return this fiscal year, and so it would be great timing to not only load up on more shares or start a position this year, with also the possibility of earning those semi-annual dividends and really being able to bankroll your investment. We can look at today's price per share, $142. And if we go back in time, like I said, when I started my position, I was at the $102 mark. And so that was right around this range in late March, early April of 2020. And since that time, it's made a pretty decent gain. Skyrocketed all the way up to $197 per share. So we've come down, obviously, from that 25% over the past year, or year to date, 9.4% downturn. And even just in the last month, we're down 10%. So if anybody has been following the news, we see that the earnings report for Q1 for Disney is coming out on Wednesday, February 9th. So I'll be paying very close attention to that. And I would love to hear what others think about Disney in particular, as well as any other companies out there that are investment options that are similar. Definitely leave those in the comments below. Share your wealth of knowledge with other investors out there, and let's help each other to make a profitable 2022. That's all I had to cover for today. And as always, be good and don't just survive, thrive!